This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today hits peak searches as Friday delivers the rally everyone hoped for. The S&P 500 surges 0.8 to a record 7,150. The Nasdaq jumps 1.1, and the Dow adds 0.6. The February jobs report came in perfect. 195,000 jobs added versus 180,000 expected, unemployment steady at 4.3, and wage growth cooling to 0.3 monthly from 0.5 last month. This is textbook Goldilocks, strong enough to confirm economic health, but not so hot it forces the Fed to keep rates elevated forever. Yesterday's ISM services beat at 53.8 showed the economy expanding. Today's jobs data confirms it. The 195,000 jobs added came with broad-based gains across healthcare, professional services, leisure, and hospitality. Construction added jobs despite higher rates. Manufacturing shed workers, but that's only 11% of employment. The unemployment rate holding at 4.3 shows the labor market is balanced, not too tight, not too loose. Wage growth moderating to 0.3 is critical because it means inflation pressures are easing without the economy breaking. That gives the Fed room to cut rates later this year, which is exactly what stock investors want. This week delivered validation on every front. Monday tested 7,000 support. It held. Tuesday brought dip buyers. Wednesday's services data proved the economy is resilient. Thursday rallied on that confirmation. Friday's jobs report sealed the deal. The S&P 500 is now up 3.2 for the week and sitting at fresh all-time highs above 7,150. Tech leadership remains intact after NVIDIA's 78% revenue growth 2 weeks ago validated AI spending. The breakout above 7,000 is now clearly confirmed as real, not false. Each pullback brings aggressive buying, which creates momentum that feeds on itself. Your 401k and retirement accounts just had one of the best weeks of 2026. The S&P 500 up 3.2 in 5 days is significant wealth creation for anyone holding index funds. Tech-heavy portfolios gained even more with semiconductors and software leading. The jobs data directly impacts your life beyond stocks. Strong hiring across services means job security remains solid. Moderating wage growth means inflation should continue cooling, which eventually brings lower mortgage rates and borrowing costs. The Fed can now consider rate cuts in June or July without worrying about reigniting inflation. That's good for home buyers, car buyers, and anyone carrying credit card debt. Markets are closed Saturday and Sunday, giving everyone time to digest this historic week. Next Wednesday brings the Consumer Price Index, the most important inflation report. If CPI shows continued moderation below 2.6, rate cut expectations will firm up and stocks could rally further. If inflation reaccelerates above 3, the party could end quickly. Also watch for any corporate earnings guidance revisions as we move through March. Technically, the S&P 500 now needs to hold 7,100 as new support. Breaking back below 7,000 would signal this rally overextended, but momentum strongly favors continuation. The fundamental backdrop is excellent: strong economy, cooling inflation, AI validation, and rate cuts on the horizon. Stay invested, but stay disciplined. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.